Well, hello, folks. I'm L.A. Little, and this is your weekly NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened last week and what does it tell us about the coming ones. I do this show every Sunday night, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. You can catch it there anytime, any place, any device, at your own convenience, of course. As far as these markets, last week we finally had a big spill. It's been a long time coming, but in fact it is here finally. And there wasn't, if we go back, and we can look at the chart here in a second, but if we go back and look at it, there wasn't anything at the top to tell you the top was in, right? And sometimes that's the way it works. You're not always going to get some sort of a reversal signal at the highs. In this particular case, we got no signal until Wednesday, and then a confirmation on Thursday, and then of course follow through on Friday. Big numbers on the way down. Dow almost 4%, S&P 3.5%, a little less than 3% on the OTC issues. The big story, of course, continues to be the oil market. That's where all the action is, and that's what keeps driving things. Let's go through the indexes first. So let's pop in here to the S&P first, and we got the weekly charts up. Now the S&P is coming back in to do a retest, regenerate off this prior swing point high breakout here. As it comes back, it's coming back with more volume, and as it comes back with more volume, that can bring it down deeper. The fact that it came back within 6 bars says it's probably going to try to test that low. That low is about 1978. That seems to be where this thing is trying to head. If you take this and do an ABCD structure on the way up, assume it pulls back to there, and assume it makes new highs, you can see that's going to be a large ABCD structure to the top side. Now the reverse of that, of course, is if you get some sort of bounce that fails, and then you could get an ABCD structure to the downside. That's why it's always so important to look at the bounces when they come in, measure where they should or shouldn't fail, and see what they actually do. That's the S&P. If you look at the Dow, it's almost the same sort of story, just a little bit worse. Now the Dow broke back into that swing point high as well. And actually, in the case of the Dow and all the other indexes, remember how we came off that bottom, and this is something to talk about because the model doesn't always catch exactly what's happening. And in this particular case, we came off that low, we popped down, made a low, we come off that low, but we don't get to register 6 bars. There's 3, 4, 5, and that 6th bar actually makes a new high. So we never register a swing point high here, even though we go up and above it. Now in this particular case, it didn't matter because we never broke the lows. So we still have a bullish projection, which is the actual situation that we have in effect. But as you'll see here on the NDX pretty soon, that's not the scenario. And when that's the case, you simply have to recognize that sometimes the model doesn't catch 100% of the accuracy of the action. And any model is going to do that. Of course, you could make exceptions, but once you start making exceptions, then you got to you got to keep track of everything. So in this particular case, you do have a suspect bullish trend. It's coming back. It's coming back to the prior highs. That's where it's going to try to test again. Top is 17,350. That's where it is. The bottom, 16,951. So fairly large area here that it could test into, and we'll just have to see how it behaves as it gets into it. Now if I pop over to the NDX, you'll see what I'm talking about. Here the model hasn't captured the big move up. There was a break of this swing point low, which changed the trend to sideways. This came back up within 6 bars, so we never put a swing point high in, and we go over it, right? And clearly that's a bullish scenario, and that should be in your minds a bullish move, but yet the trends show as sideways because of how strong and how fast this came back after a big spill. Again, just a testament to the veracity of this move. As it comes back in, that's going to be the area that's going to get tested. And here on the NDX, it has a ways to go. That's the most bullish of the indexes out there. And let's see, I was going to put the NASDAQ up. If I put the NASDAQ up, you can see it's doing the same thing coming back in. Now the Russell has already well, actually the Russell never made the highs like everything else. And if we look at it on a weekly, it was trying to get over this high, never did. So now it's back at the bottom of this range it's been playing with. If it can't hold this range, then the next thing you have to expect is it's going to come deeper. Looking at the weekly, it's kind of hard to tell, but somewhere in this area, probably in here, is where it's going to try to come to on a weekly basis. Volume picks up as it comes back in. Volume picks up on everything, which is what you would expect. Looking at the Russell on a daily, you can actually see that range, and we've talked about it before. There's kind of two of them here. You got a range there and here, and then you've got another one potentially below it. If it breaks down, it's right there. Looks like it's going to try to test it this week. So that's the Russell. That's how it's set up. So indexes in general, we saw the pullback. We saw it come off the top, but we didn't really have any indication that that pullback was going to take place. All we had, if you remember, was the energy market breaking down. Everything else was holding up. The only clues we got came a little bit later in the process, which was we tried to break down on this bar. We did break down on the very next one, and remember that was a takeaway bar. So we took away all the goodness from the previous one. Thursday's move back up, tries to do a takeaway of a takeaway, yet by the end of the day, it's a reversal, which was a confirmation of the prior day, and then you saw the follow through on Friday. So, you know, if you were a member or if you listened to the show on Thursday, you heard me talk about we'd probably try to gap down and have pressure on Friday, and that's exactly what we got. So that's kind of a setup in the indexes. Now, if we look at the sectors, you're going to see that the sectors are starting to struggle as well, and those sector struggles are fairly, well, I wouldn't call them serious, but they're definitely noticeable. Let's go with the ones that are being hurt the most. Of course, the XLE is the worst off, breaks the lows. This is on a weekly, breaks it multiple time frames last week. It's already got the push. Usually you get that kind of break, you're going to get 2 to 3 bars follow through, which means either sideways or lower. That spillover from the XLE is now starting to affect other things like the XLI. So what you're going to see on most of these major sectors this week is a retest regenerate on the weeklies. Here's the XLI over the top, back in with 6 bars, doing the test. If you look at the XLK, you have kind of the same scenario. Even though the XLK is not quite as affected, it's coming back trying to do the retest regen off that prior swing point high break. Another one that is directly affected is the XLB. Now the XLB went up, couldn't get over the high, tested it with actually more volume, yet didn't get over it. Now it's coming back hard. It's back into this big bar. You can see the volume's not there. I expect that this one's going to try to hold as a result of that. So everywhere we look, we're seeing the effects of that big fast move down starting, in the energy, starting to spread into other sectors. XLF, takeaway bar. XLY XLY was up at the highs. What does it do? Comes back, right? Coming back in again. They're all coming back to these prior swing point highs. XLV has a ways to go just to get back to that area, but that's from the strongest to the weakest. Weakest to the strongest. But across the sectors, they're not leading this market lower. They're just confirming what took place. Everything, other than energy and to some extent the material sector, we never saw any kind of indication that we were going to get a hard pullback. Energy was the one that was showing it. At the same time, as I've probably said here, I know I've said to members that we could get a retrace at any point, and it wouldn't be a surprise. And if you look at, and I'm just going to pull over the monthly of the XLV since I happen to have that up, but if you look at a chart of any of the indexes or the sectors, they all look the same. Since 2011 lows, it's been a straight up move. That's 3 years of nothing but climbing. You know, to get a retrace, and so far it's like 3%, to get a retrace is nothing here. Just like it was nothing when it did it back here in October. You know, to break this market down, it's going to take a lot more than what we've seen so far. Doesn't mean it can't happen. Certainly it can. But at the same time, you know, you get a 3% move back after a 15% move up. It doesn't really mean that much. And that's really where your head should be at this particular time. If we look over at the ox markets, take a quick look at these. What you're seeing here is any kind of risk on, you know, heavy risk on is getting sold. Emerging markets, EEM, what does it do? It breaks on multiple time frames. These are going after the lows. So risk on type scenarios are getting sold. They're going back to test these lows or this support zone down here at the lows. That's happening here with the EEM. That's happening in anything with, not anything, but with the bonds. You know, a good viewer pointed this out last week, and I actually didn't cover it, so I'll cover it completely tonight. And here it is, the junk bonds. You know, he had said, okay, what does it look like on multiple time frames? And I don't think I actually covered that on Thursday night when I was looking at this. It was breaking on multiple time frames. As a matter of fact, it was breaking on all three of them. Here's the break. You can see the huge move off that break. You've got it on the daily. You've got it on the weekly. You've got it on the monthly. That sort of breakdown is going to carry. It's not going to give it up. Here's the break on the monthly. So as we break, and of course the monthly is not done, right? We've still got another couple of weeks. But as you break and you start to push lower, right, that is telling you folks are taking risk off anything, and in this particular case probably a lot of the energy names that have junk out there are getting hit hard, and that spreads, right? That fear spreads. Others get hit off of it. I do not expect these to recover, you know, quickly. Can they bounce? You know, can energy bounce? Sure, but is it going to like go straight back up? No, it's not going to happen. If I look at the oil market, there's no bottoms in place on that junk market. There's no bottoms in place here either, folks. This has just been a straight down cave-in since June. And what's the number here? Since June, it's probably 40-something% now. 39 down to 21, 22. Call it 39 to 22. That's 17 off of 39. I can't do the math that fast, but that's 40-something%. It's big. And there's no sign of a reversal yet here or on the daily. You're going to see it on the daily first. If I look at the futures tonight, I believe they're still trading down. Let me pop over and see what they look like here real quick. Down another 75 cents, 1.3%. So still caving in even tonight. So don't look for, I would not be looking there for any kind of relief of any major magnitude. Yeah, it's going to bounce at some point, but not yet. Bonds, on the other hand, doing exactly the opposite, going for the highs. Remember, we had that big spike high on October 15th, which was the low in the markets. Now we're coming all the way back up to that spike high with the bonds. Now realize you're almost to the highs on the bonds, yet the market is nowhere near the lows from October 15th. That divergence, again, testament to how strong the equity markets still are, and that is something you have to realize. Hey, if they won't sell down in a larger way, and you know they still could, but if they won't sell down in a larger way, if they find support off those weekly charts, they're going to get a nice bounce, and that bounce probably takes some back up and does some sort of testing to the top side again. Bonds coming back up, going to try to test the top. They don't have nearly the volume. They'll fail up there if they get up there. I saw bonds were up tonight too. Looking a little bit farther here, gold, silver, they're still hanging at the highs that they were, and that's the daily. Let's put the weeklies back. So here's the move up on these, but folks, these are just bounces. You know, I mean, yeah, they could do something, but like I told you before, they got to get over those swing point highs. Here's the high on gold. You just saw the one on silver. And the reason they have to get over this is that's the retest regen on the weekly. The intermediate term time frame has to turn back into a range trade to make you think that gold can continue and has found a bottom. Until we get that, we don't know that. Right now, it's simply a bounce, and yeah, it's a decent one. And these things can bounce, you know, 15, 20% because they were down so much. So that's the way those set up. Dollar's actually just kind of hanging here. We had the euro, yen getting sold off completely. Dollar tried to do almost a takeaway bar, but not complete. But dollar looks like it's going to do some sideways action for a little while now. All right, so in summary here. Oh, I didn't go over the world markets, but China's still holding at the highs. Japan's holding near the highs as well. It's just those emerging markets that are selling off, and the European markets as well. Let me put up Germany, and you can see, and Germany's actually the strongest in Europe, but you can see the damage that was done last week here, just like in our markets. This was down almost 5%. So it makes a new high, comes back, it's doing a retest regen off this prior swing point high. That low is 95.88. It closed at 95.94. This one is the one that needs to hold if it's going to regenerate and go make new highs. And that's because it is the strongest one. That's the one you'd look for to do that. If you look over at the CACs, for example, it's already under those highs. And you know, that swing point high was up here and didn't get to it. It's not nearly as strong, right? It's down at the bottom of the range here, coming back into this big bar. But this looks like where they would bounce from. So when I look at Europe, I still see Japan and China at highs. You know, world markets other than emerging markets still look fine. Equity markets U.S., they're coming back doing retest regens off the weeklies. They still look fine. I mean, it's going to take a lot more than this to change the longer-term picture. It just looks like normal ebb and flow to me, and that would be the synopsis I'd leave you with tonight. Let me take 2 or 3 stocks here that were mentioned they wanted me to take a look at, so let me pop over from viewers. And the first one is Adobe. Adobe reported earnings last week and had a pretty nice pop up. Let's get that chart up. And so this gentleman's wanting to go long on a longer term time frame and wanting to know where that buy is. So here's the breakout on the high. Huge volume comes in. You know, that looks pretty good. If I pull over and look at the weekly, breaks out over the high here a couple of weeks back. So it's over the highs, but it doesn't have the volume. So when I look at it from this perspective, I suspect you're going to see you know, some sort of retrace back into this area to allow you to try to do some work on this and try to get back in. So I would be looking for it in that price point. About 74.5 is probably the spot to be thinking about Adobe and an entry point on it. If we look at the other two, this is A&F, which is Abercrombie. The question here is it time to buy this? And no, I don't think so. And I think what they were looking at was this particular bar up as well as this one. So you had the huge bar down over here, right? You come up underneath it, you test, you go down, come back, you close higher, you go underneath it. Now you get some volume back up. But folks, this is just testing. I mean, it really hasn't gotten over any of these swing point highs yet. And yeah, we had a low volume come in twice, but it's still small compared to what's happened. And sorry, let me pull that chart over so you can see it all. So, you know, that's a pop up and just kind of hanging here. If I go to the weekly chart, you can see all you have is an under over. Yeah, you could get a bounce. You could even get a move up to about 30 bucks. But, you know, there's just a lot better charts out here than this one. I wouldn't be trying to bottom fish this one yet. This is the kind of chart you want to see it go sideways for a while and then eventually, you know, give you an entry. And if I had to draw your attention to something that did that, it's like Whole Foods. If I look at Whole Foods and pull it back, put it on a weekly, here you had the big drop down, there's the bump up, and now here's the test. You get another bump up and you test again. That's the kind of scenario where you're looking for potentially some sort of a nice move off that area after an extended period of time. And we went from May to almost November. That's 6 months. Sideways type action. It's going to probably take Abercrombie Fitch that long to do the same sort of thing, even if it's going to do it. So, I would be looking for that type of scenario, and just be patient if you're wanting to get into Abercrombie Fitch. Now, if you look at another one that's in the same sector, here's Burlington Stores. This one actually had earnings, popped higher. It's testing. The market's been weak. This one wants to go higher. If I look at it on a monthly, making new highs up there. Doesn't have quite the volume right now, but making new highs. If I look at it on the weekly, making new highs, volume expanding. So this is the type of stock that, if I'm looking for an entry, which is what this particular viewer is asking about, yeah, this is the spot. You try to get it as close as you can to this 44 area, and you're looking for this thing to extend up higher. I like the setup here. The only thing that is not good about it is that the ABCD structure doesn't get you that much higher. So yeah, you could get up about, it looks like about 47. So you really need to catch it down here if you're going to get in, and have your stops up underneath this low, which is about 43 and change. So buck here, $3 to the top side. That's a pretty good reward risk if you can get into it. Okay, well, that's it for this week. I think we're going to see some choppy trading Monday, Tuesday. You got the Fed on Wednesday. That's going to be the big event this week. There is a lot of other data this week. You've got quadruple witching on Friday. And folks, this is the last week before the 2 Christmas weeks, the end of the year trading, where volume is just going to totally dry up. So if you're going to see any kind of larger moves, it's probably going to be this week. And I suspect until oil stabilizes, these markets are going to continue to be volatile. All right, well, I hope that helps, and I appreciate you being there. Tell a friend, tell two. I'm LA. This is and it was your weekly NeoTA wrap. Have yourself a great night. Take care, and I'll see you next time. Good night, folks.